Hey everybody, hope everyone's doing well and had a good day. This is the Emini overview for Tuesday, August 27th, 2024. So here's the daily chart coming into the day. The market's in a trading range, big down, big up. Lots of overlapping bars, especially over the past 5 days or so. And yesterday is a low 2 setup. It's a low 2 signal bar below yesterday's low. So we have this rally, low 1 short, it failed. Now we have a low 2 setting up, but the signal bar is a trading range bar, basically a doji, and it's after a pretty strong rally. This is also an expanding triangle. We have several pushes up with higher highs. We have a low, a lower low. So there's at least 5 legs in here, 2 pushes down, 3 pushes up, and a bad sell signal bar, trading range day, so trading range bar. The expectation is buyers below yesterday's low and sellers above yesterday's high. So for the 5-minute, here's what we have coming into the day. The first bar of the day breaks out below yesterday's low, but pulls back. The bears want a strong entry bar. If the low 2 setup has a weak signal bar, which it does, big tail below, small body, trading range bar, they need a strong entry bar. So this is a bad start for the bears. Now, some bears, they view this as a breakout pullback. But if you think about it, tails on bars indicate a failed breakout. So if we look at bar 1 on the 1-minute chart, what do we see? Here's the close of bar 1. The market tried to break out below yesterday's low, had a big outside up bar, big reversal, it's a failure. And then we have a low 1 short on the last bar of bar 1 on the 1-minute chart, the 5th bar of the day, the 5th minute of the day. And it's a good signal bar, bear reversal bar closing on its low. And every double top is a low 2, so some traders see the low 1 here, low 2 here. But we do see that there was support below yesterday's low. It does not look like the market is trying to break out strongly below yesterday's low. And then we get this for the bears. So it looks like good follow through at first, but if you dissect the next bar, these next 5 or 6 bars, what we have is a wedge. Here's one push, the doji, pull back, second push, inside bar, that's a pause, and then a third push. And look at the third push compared to the other bars. This bar is the biggest and strongest bar of any of the bars in the sell-off, and that's characteristic of climactic behavior. It could be an exhaustion gap. This is a bar that bears may use to take profits, and aggressive bulls can buy, betting. It's a bear channel. We're getting a test of the channel line, low probability of a bear breakout of a bear channel line, and the expectation is at least some sort of correction, maybe 2 legs, 10 bars sideways to up. You can see what happened on the next bar, but I don't want to get carried away on the 1-minute chart for today. So that's what we had today. Leg 1, pullback. Second leg, it's almost like a small second leg trap. Bad follow through on 3. Some traders will buy above 3, betting failed breakout below yesterday's low. Good follow through for the bulls. Now we have an open gap. If you think about a bear selling bar 3, there's a tail above the bar. With the gap down, the bears had 4, 5, 6 consecutive bear bars. It should get a second leg down, so some bears sell above bar 3. And then look at bar 4. There actually was a second leg on bar 4. It's just that it was implied on a smaller time frame and within the tails of this time frame. So here's leg 1 down to the low of 3. The market pulled back, and then from the high of 3 to the low of 4, there was the second leg. It even tested the low tick of this bar, bar 2, and then reversed. And then bears gave up on the sell, bulls bought, everybody bought. We rallied, so this is a decent bull breakout. And the market's getting vacuumed back to an area of agreement. Tight trading ranges are magnets because the bulls and bears were in agreement, so breakouts typically don't go far, and they tend to retest these prices. So tight trading range, bear breakout attempt, but getting sucked right back to that price area. So strong enough bull breakout. It's probably leg one, probably going to get a second leg. We're pulling back. So the traders are assessing the strength of the reversal attempt by the bears. Here's a bull breakout. Is it going to succeed or is it going to fail? So far, are you eager to sell below 6 after a 3-bar micro channel, trading range bar, inside bar? Probably not a great sell. And then a bull bar going higher, still probably not a great sell. Buyers below. Inside bar, tight trading range after a breakout. Probably going sideways, but it still needs a second leg up. Finally, we fell below here. The micro channel ends, fell below bar 8. Second, it's an implied second entry or second reversal. Bar 6, low 1, bar 9, low 2. But tight trading range. It's very similar to what I was saying on the daily chart. You have a rally, and then there's an expanding triangle. It's not quite an expanding triangle here. Maybe on a smaller time frame it would look more like one. The market is probing up and down, getting higher highs, just not lower lows in this case. But tight trading range after a rally, and then a weak low 2 signal bar, probably buyers below. Then you can see what happened. So bar 10 is a high 2. There's a high 1 on bar 8, high 2. Bar 10, double bottom with 6. It's a decent reversal bar closing near its high. And after this rally, we'll probably get another leg up. So good follow through for the bulls. More good follow through, breakout and follow through, probably going higher. And there may be resistance to the left. But this is all a really tight channel for the bulls. And we know that's a breakout on a higher time frame. So the bears at this point need a trendline break before any major reversal. So this is minor. Traders are buying below bar 13. Is bar 13, this doji reversal bar, going to reverse this rally? Probably not. Small risk. The bar is small relative to the rally. So small bar means small risk. Small risk means big reward, and that means low probability. So traders have a better chance of making money buying below bar 13. You can see we fell below 13, reversed up right away. Low 2, 15, but consecutive bull bars, bad signal bar, buyers below. We ran the stops above 13. So breakout, pause, breakout, pause. Probably get one more breakout. This was strong enough for a second leg. But that would be 3 pushes up. So here's 3 pushes up. Sideways, bear bar, high 1, but 21, probably sellers above. It's a weak high 1 signal bar. After 3 pushes up, we might need a correction. So then we had a big bear bar, 22. And that's enough to make the bulls disappointed. Anyone who bought up here, in other words, this is strong enough for a second leg. Traders are trapped. Bulls who bought up here are trapped. Bears didn't sell. Betting tight bull channel. I don't want to sell. But now we have a sign of strength by the bears. 3 pushes up. Expectation is a correction. Where will we correct to? There are a couple of magnets. So the bulls have open gaps. I mentioned that earlier. I meant to draw them. So let's go back. Bar 5. We have a gap between the high of bar 3 and the close. And this gap would be this big. And then we have another gap. And this gap would be this big. It's a couple open gaps for the bulls. That's good for the bulls. The problem for the bulls is 3 pushes up. And that happens. And you look to the left and the market is in a trading range. It was a broad bear channel. Channels evolve into trading ranges. We get above this major lower high, but the expectation there is resistance. Bears are selling high in the trading range. Traders are selling high, buying low. So we might be high in the range. Bulls are taking profits. Bears are beginning to sell. But tight bull channel. Here's a trend line break on 22. And now there's probably sellers above. Probably going to correct for at least a couple of legs sideways to down. And then again, where are we going to correct to? Well, there's a stop order here above bar 10, and that will be a target, and that will be not only a magnet, but it's expected to be support. Why? Because here, the market's in a tight trading range. This was not a high probability buy above bar 10. It's a limit order market. You have sellers above bars, buyers below bars, all the bars overlapping, small bodies, big tails. Stop orders should not work. and then we had a stop order that worked and got followed through. So you have bulls who did not buy here. You had bears selling above, scaling in higher. Everybody's trapped. That produces a second leg and then makes this price area support if we come back and retest it. Strong enough for a second leg, probably going lower. Bear breakout and follow through. Small open gap, good for the bears. And then a really quick second leg. This could all be just one leg. And it's tight enough, and there's actually no pullbacks. It's a micro channel that it should get a second leg down. Big up, big down. The market is probably in a trading range. This also might be a 50% pullback of the bull breakout. So here's 50%. We're around 50% finding support. We also went a little bit lower. There's another price area I didn't mention, which is the bar 9 low. Traders were trapped below bar 9. Bears sell the low 2, immediately trapped. And what's a bear going to do if they sold here and scaled in higher? Or if they didn't scale in, but they held the position, they get back to their original entry, they'll be happy to get out at break even. So then we bounce here. Is this enough to reverse this? Probably not. Probably need another leg down. Is that the second leg? I don't know. It might be. This all might be leg 1. We might get a deeper pullback and then a bigger, more symmetrical second leg down. 1, 2, 3 pushes up. The best bull bar in the rally, the biggest bar, the strongest bar, will lead to profit taking. That might be 50% of the bear breakout. There's 50%. If you use the bodies, it's more accurate. There's 50%. Looks about perfect. So the expectation here, more sideways, big up, big down, big up. But the bear should get a second leg. For the bears, so 50% pullback after this breakout. And then you can look at it as 3 pushes up. And 33 is a breakout of a bull channel. So on a smaller time frame, it's more clear. This is a bull channel. We're getting higher lows, higher highs, 3 pushes up. And I mentioned 33 is the most climactic bar. It's the biggest bar. And there's only been 3 or 4 bull bars in this entire sequence of bars after all of these bear bars. This is not great for the bulls. It's good for the bulls that we broke the trend line. So now on a retest, you have trapped traders below, disappointed bears looking to buy back shorts, bulls more willing to buy. That's good for the bulls. It's the exact opposite of what happened here. Strong rally, trend line break. If we get back up here, the expectation is resistance. Bar 20 was a weak stop order sell, tight bull channel, doji signal bar, but it worked. And then the bears have a trend line break and a major trend reversal setup. Trend line break, get a retest, look for a double top, and a major trend reversal to the downside. Most major trend reversals result in trading ranges, not major reversals into opposite trends. So we have a minor major trend reversal setting up here. It's a bear leg in a trading range, a trend line break of that bear leg, but this should still get a more symmetrical second leg. But the expectation of that second leg is to not go very far below the low of bar 25 if we do get there. So this is a low 3, low 1, 28, low 2, 31, low 3, 34. In other words, a wedge bear flag. The entry bar isn't great, but the alternative, it's a high 1 signal bar for the bulls at a 50% pullback, consecutive bear bars, weak signal bar, probably sellers above. And then might be in a little bit of an endless pullback, 3 consecutive bear bars, probably sellers above. Bulls are trapped on the close of 33. 37 might be a brief second leg for the bulls. Here's a breakout, a pullback, and then a brief second leg, but we know traders who bought the close of 33 are disappointed. They'll probably look to get out at break even, and then everybody sells. Strong bear reversal bar or trend bar. Closing on its low. The expectation is a retest somewhere down here. I'll keep this red line. We didn't quite get there to the bar 9 low. We didn't quite get there on 25. We still may get there. The minimum expectation for the bears second leg, where this is leg 1, pullback, leg 2, we're expecting a retest. We're expecting to go 1 tick beyond the low of bar 25. Selling off on 39. Good for the bears, but look to the left. Big up, big down, big up, big down. This looks like a trading range. So buy low, sell high. This is low in the range. We just saw that when the market got to this price, we rallied for how many points? Market rallied almost 14 points. That's pretty disappointing, and it's a clear trend line break for the bears. Here's the trend line. Strong trend line break, bars above the moving average, even one bar completely above the moving average, 34. So the retest, you're expecting support for the reasons I said earlier, and then reversal. So this is a major trend reversal set up for the bulls, bear trend, trend line break, retest, good entry, or good signal bar. It's a double bottom, bull flag, bull trend. It's funny, this is actually, it's a high 2 on a higher time frame. Remember, high 2s, double bottoms are always high 2s. I said that over here with bar 10. It's a double bottom, so it's a high 2. So over here, on some higher time frame, this is simply a bull breakout with, 3 to 5 bars, maybe 2 bars down, 1 bar up, another bar down. It's a high 1 somewhere in here, and then a high 2 here. Basically what I'm getting at, maybe we look at the 15-minute chart, it's more clear what I'm saying. This is today. So the bar all the way to the right is what I'm talking about. Bull breakout, 5-6 bars, a couple bars down. So strong enough breakout for a second leg. Here's your second leg. High 1, high 2. This is what we're looking at on the 5-minute right now. It's a reasonable buy setup. Doesn't matter what time frame you're looking at. It's a big high 1 and then high 2. Good entry bar, bad sell, buyers below, market's rallying, tight bull channel, probably going higher. 48 is climactic. We're testing an area of resistance. We're high in the trading range. This was enough damage by the bears that this is probably not a bull trend. If it is, it's a broad bull channel, and those behave just like trading ranges that are sloped. So expectation, if we do get to a new high of the day, is resistance, probably bulls taking profits, bears selling. We came close, but getting a little bit of an endless pullback, kind of like here. Expectation, 51, bad high 1, consecutive dojis, trading ranges. High in the range, probably sellers above. We go above, but then not great follow through for the bulls. Still a tight channel, but where's the momentum for the bulls? We've gone sideways for like 7-8 bars here. Not ideal for the bulls, especially if they're buying momentum. This looks like a trading range, and we're high in the range. So maybe a stop order sell below 56, but use a wide stop, signal bar small. Bears get some follow through, a little bit of endless pullback, and disappointing for the bulls. Nothing to buy for the bulls. There's been more dojis and bear bars than bull bars in the past 7 or 8 bars. Stop order bulls, they're not really eager to buy, high in the range with no momentum. So sellers above. It looks like we're in a trading range here. You can call it a triangle. The market's getting squeezed. Higher lows, lower highs. And then a bear breakout attempt. But remember what I said in the beginning of the video. Over here, the market was in an area of agreement, tight trading range, bear breakout attempt, quickly came back and retested this area. So I suspect it's the same kind of thing over here. Tight trading range, area of agreement, bear breakout attempt. But look at the bear breakout attempt. 1, 2, 3 pushes down. So it's a wedge. It's a breakout of a tight trading range. The expectation is failure. We come right back and test that area. Really similar to over here too. Look at the bear breakout of this tight trading range. 1, 2, 3, 4 legs down. Maybe it's just 1, 2, 3. Depends on how you look at it, but consecutive sell climaxes with very deep pullbacks. These rallies are deep. And then you get 1, 2, 3. That's the bear breakout attempt. It's a third leg. It's climactic after a tight trading range. So kind of similar to up here. And then probably just sideways into the close, which is basically what we got. Lots of trading range price action. So for stop orders today, I thought 3 was a reasonable buy. You could also buy above 4. Maybe buy the close on 5. I thought 10 was a reasonable stop order buy. You could buy the high 2. There's momentum. You could buy the close of 11, buy above 12. Gets dangerous up here after 1, 2, 3 pushes up. Not ideal to buy. Plus, they're high in the range over here. And then, I don't know, hard to get short here after the tight bull channel. The best looking bar to sell below looks like 24, but you're getting too close to an area of support. It's really not ideal. And then through here, I don't know, maybe you sell the low 3. Small signal bar after a big bull bar, hard to sell. But you are expecting a retest, and then I thought 40 was a really decent stop order buy. And then up here, really hard to take stop orders when the market looks like this. Look at all the dojis and overlap. The range is small. It's more of a limit order market, so really not ideal for stop orders for the remainder of the day. Where do we go tomorrow? Well, the bulls see a high 2 in a bull trend. Here's a rally, high 1, maybe even a high 3, high 1, high 2, high 3, head and shoulders, bottom, good signal bar. The problem for the bulls, a couple of problems. It's a nested trading range, so tight trading range over the past 6 bars here. Big down, big up here, so we're high in the big trading range, and we're high in the small trading range, probably sellers above this bar. Stop orders get chewed up in tight trading ranges, but the bulls see a bull trend. They see a trading range as a minor reversal and a trend resumption setup. So some bulls will buy above here looking for trend resumption, but you manage that trade based on what the market shows you, how the market reacts. If the market is racing up and we get a bull trend from the open tomorrow, traders will press their position, they'll buy more, they'll hold. But if we get something more similar to today, here's your breakout of yesterday's low, immediate reversal. That doesn't look like the breakout is succeeding, so we actually may go more sideways. I also think the high of Monday will be resistance, so not today. We'll be calling this yesterday, tomorrow, but 2 days ago. Monday's high, probably resistance, tight trading range, but we'll see. Thanks everybody for watching. I hope everyone has a good rest of their night.